Welcome to everyone. In this week video you will learn how powerful and profitable the cycles are. You will also learn how to use them to trade the stock market to increase your profits. This week video will cover the S&P 500 for the week of July 29, 2024. Before we start, make sure you read carefully the disclaimer. The last update for the S&P 500 was on July 15th. At that time, I mentioned the S&P 500 is on its way to form the 40-week cycle peak. We are also in very interesting situation because we have two options where to place the 80-day cycle low. Let's see what's happened since then. We will start by the 10-day cycle. On Wednesday, July 17, the S&P 500 crossed below his cycle line at 5,609 for a potential downside target at 5,548. The target had been met very quickly the next day on July 18th. The next 10 days low is expected to happen on Monday, July 29th. After the 29, plus or minus 1 or 2 days, the S&P 500 should rebound and cross his cycle line, providing an upside target. Here are the cycle lines for this week and their potential target when this will happen. The success rate is 100%. The 20-day cycle. On July 19th, the S&P 500 made the previous 20-day cycle low. The next low is expected on August 5th. On the same day the market made his low, he crossed below his cycle line at 5,570. For a potential downside target at 5,470. 99.67 points or 1.79% of potential profits. Confirming the 5,669 high was at least in 20 days cycle peak. On the same day the S&P 500 crossed below his cycle line, he crossed below his 20-day cycle trend line, the green line. By crossing his cycle trend line, the market confirmed the 5,669.67 high is not only the 20 days cycle peak, it is also the 40 days cycle peak. According to the Hurst principle, when the market crossed below his cycle trend line or VTL, the crossing confirmed the peak of the next longer cycle is formed or in formation. In this case, since we deal with the 20 days cycle, the next longer cycle is the 40 days cycle. Then the 5,669.67 high is also the 40 days cycle peak. To have a better understanding about the cycle trend line or VTL, I recommend to watch my series of video, Secrets Behind the Cycles. I posted the link in description below. The cycle trend line are very helpful to anticipate the market peaks. The success rate is 100%. Here the cycle line for this week and their potential target. If the market cross above them, this will confirm the precedent low as the 20 days cycle low. The 40 days cycle. On July 24th, the S&P 500 crossed below his first cycle line at 5,562 and 5,505 for the second line. This crossing provided downside potential target zone between 5,455 and 5,341, or respectively $107 and $164, or between 1.93 and 2.98% of potential profits. On the same day, the 5,419 low met the top of the target zone, and on Thursday with a low at 5,390, the S&P 500 was right in the target zone. This was probably a 40 days cycle low. Originally this 40 days low was expected on August 4th. We will have the confirmation of this 40 days cycle low when the S&P 500 will cross above his cycle lines. The S&P 500 crossed below his 40 days cycle trend line on July 18th. Confirming the 5,669 high is the 40 days peak and the 80 days cycle peak. Since January the success rate is 100%. Here are the cycle lines for this week and their potential targets. The 80 days cycle. On this time frame we have two different options where to place the 80 days cycle. The first option is the 80 days low occurred on July 1st, like mentioned in my previous update. Second option, the 80-day cycle is still to come or occurred last week on Thursday. Let's start with the first option. According to the Hearst nominal model, the 80-day cycle is 68 days long. On July 1st, the 80-day cycle was 73 days long from the last major low on April 19th. Just 5 days longer than the nominal model. Also mentioned on the last update, the next 80 days low is expected on September 8th. What are the implications for this scenario? If the July 1st is the 80 days cycle low, and we draw the 80 days cycle trend line from the May 31st low to the July 1st, the market crossed below the trend line on July 18th. If that is correct and according to the Hearst rules, this will confirm the 80 days cycle peak, but also confirm the peak of the next longer cycle, which is the 20 weeks. We will see more details later about this cycle. The implication of this scenario is, the next trend should be down. On August 4th we should expect the 40 days low to form. Then a rebound toward his 20 days cycle line. Certainly using it as resistance, since the 20 days cycle line didn't provide support like he's supposed to do. Even if technically, the market's supposed to cross back above his cycle line. Then we can estimate the next trend is down on his way to the 40-week cycle low, around the first week of September. So the market should find resistance on his 20-day cycle line. The second scenario is the 80-day cycle low is still to come or may occurred last Thursday, July 25th. If it's occurred last Thursday, this 80-day cycle is 98 days long. This is very long for a 80-day cycle, but not impossible, since the daily cycles from the previous 20-week cycle was running long. But if we add the last 20-week cycle length from October 2023 to July 25, 2024, is 273 days, which match with the 40-week cycle length on the nominal model, which is 272 days. In this case, we can estimate all the daily cycles in this 20-week cycle run shorter than the nominal model. To confirm this option, the market have to rebound sharply and cross above his 20 and 40 days cycle lines, on his way to a new all-time high. In this scenario, we also can expect the next 80 days forming a low on the last week of September or the first week of October. What to expect for the next few weeks? In the first scenario, we can expect a rally in the next 2 to 3 weeks and another decline to form a low in September, for the 40 weeks low. In the second scenario, if the July 25th was the 40 weeks low, we can expect a rally, and this rally should bring us to a new all-time high. How we will know which scenario is the most likely to happen? We have to keep an eye on the 80 days cycle line. Last week, the S&P 500 found support on his cycle line. Any sharp decline below it, then the first scenario could be considerate. Here the cycle line for this week, and their potential targets if the market cross below this week. Why sometimes there is some uncertainty about placing some cycles. This is due to the rule of variation, in fact very often when one cycle is longer, and the second cycle is shorter, to make an average. But it's happened too, all cycles run longer, especially if the market is waiting for some kind of news. Usually in the bull market, is very likely the cycles run shorter. Remember the Hearst nominal model is an average. The success rate is 100%. The 20-week cycle. The last 20 weeks low occurred in April. This 20-week cycle was very long, 175 days, for an average of 136 days, 39 days longer than the Hearst nominal model. On my last update, I mentioned the date for this 20-week cycle low is scheduled between August 12th and 26th. No matter which option we choose, we know the next low will be at least a 20-week cycle. Because the principle of synchronicity, when this 20-week cycle will form a low, he will also form the 40-week cycle low. Technically at that stage of the cycle, the second 20-week cycle should cross below his cycle line, providing a downside target for the 40-week cycle. But very often in a very strong bull market, the market finds support on his cycle line. Last week low, the S&P 500 found support on his 20-week cycle trend line. Any sharp crossing below will confirm, the 5,669 high is the 40-week cycle peak. Confirming the 80 days low in the 40 weeks is still to come. The cycle line for this week, and the potential downside target, in case the market cross below this week. The success rate for the 20-week cycle is 100%. The 40-week cycle. The third option from my last update, placing the 40-week cycle on the April low, is very unlikely, and we can eliminate this option. Last week, the market stopped right on his 20-week cycle trend line, the blue line. This means there is a probability last week low could be the 40-week cycle low. From the last major October 2023 low, this cycle is 273 days long. On the Hearst nominal model, the 40 weeks length get an average of 272 days. Usually at the first 40-week cycle after a major low. The 40-week cycle should find support on his cycle line. But since this bull market is very strong, we can consider it this 40-week cycle won't find support on his cycle line. In this case, the second 20-week cycle is shorter than the first one. Otherwise, we can expect the 40-week cycle low to form in September or even first week of October. The success rate is 100%. In conclusion, when we have that kind of situation, like for the past 2 weeks, we have some uncertainty where to place some cycles. It doesn't really matter to know with exactitude where to place the cycles. Since for trading, we use the cycle lines crossing as trading signal. As example, when the market cross any cycle line, this confirm the peak or the low of this cycle. In the actual case, we know the last low or the one in the next few days will be the 40 days low, when the market will cross above his cycle line. Then we can trade this cycle with confidence, and the situation where to place which cycle will be automatically clarified. If you like this video, please click on the like button and subscribe to make sure you don't miss any future important videos. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.